Now, integrated energy company Aradel Holdings has reported a 361% rise in its profit after tax, which came in at 247.8 billion naira in 2024. Now, the oil firm, which is part of the consortium that acquired the assets of Shell Petroleum Development Company and listed also by introduction on the NGX in October last year, also saw a 135.4% increase in cash flows from operations in the year on the review. Adegbite Falade, the CEO of Aradel Holdings, joins me now to unpack the numbers. Thank you so much. It's a pleasure to have you.
Thank you. It's my pleasure to be here.
Let's get right to the numbers. Triple-digit growth and wider profit margins. Just looking at the numbers from 2023 versus 2024, a significant jump. So let's start with top-line growth. Walk us through the key drivers of this significant growth that we're looking at in the numbers.
Okay, thank you very much. Our business has three vertical revenue streams, and in the year under review, we've experienced growth in each of those three. In the upstream, we had as much as about 41% growth, and bear in mind, we also had a bit of price growth relative to 2023. Our ability to evacuate all of that to the point of sale has been the fundamental reason behind the top-line numbers. And that growth at the top line, especially from the upstream, is driven by incremental contribution from new wells that we brought on stream in 2024.
Right. Oh, okay. Let's also look at some pressures. I thought you wanted to continue with that. Now, so a bit of pressure in cost of sales, operating expenses. Talk to us about that, and if you were able also to cushion that effect.
So the pressure you see on the cost of sales is driven first and primarily as a consequence of the increase in production.
Okay.
The biggest cost components come from the cost of handling the crude, so evacuation costs, transportation costs. But in there as well are costs associated with production relating to royalty. So you have a significant portion of that are growth linked to the growth in production and in top line. And that's really the largest portion of that. Admittedly, when you look at what the gross margin in 2024 is relative to 2023, it seems as if 2024 was slightly trailing behind 2023. But it's more of timing, right. Timing around how certain costs occurred in time and in phasing between 2023 and 2024, not necessarily matched to the year of production and extraction. So I think we've done exceptionally well in being efficient with our costs. That shows up pretty much when you look at the other marginal results below the gross margin. It sort of places itself very strongly. The more you grow your top line, the more you grow your barrels, it has ways of helping you to manage your fixed costs.
Right.
And that's really what we're experiencing right now. If you strip away what I said about the costs that are linked to production, if you also strip away the fact that in 2024, we witnessed less of arbitrage between the official price and the official exchange rate, right. and the parallel market. All that put together are the reasons why we've seen better performances at the lower margin lines than the one at the top line. So that's really what's been responsible for that.
Okay, right. Now looking at, the revenue streams, crude oil sales, 64% of your revenues came from that, 31% generated from refined products, 5% from gas production. I remember last year, in an interview, you did mention that your gas production was growing, or gas business was growing rapidly. Talk to us about that. Is there still momentum?
Oh, there's still momentum. So without prejudice, the gas production and gas revenue in 2024 compared to 2023 is higher. But as a percentage of the whole, it's lower. And that's not a disservice to gas. It just shows how much of momentum growth we had in the export liquid portion of our business. We ended 2024 having to do deliberate curtailment of our gas production in order to maintain operational safety because we were drilling new wells in the same cellar as our prolific gas producing wells. So for a significant portion of 2024, we had those gas producing wells shutting just for process safety. We are currently in the process of restreaming and bringing on stream both the new well we have drilled and the existing well. So 2025 would see even a better performance that is consistent with the potential of gas that we see in our fields.
Right, that was going to lead me to my next question. Your projects in the pipeline this year. I know you have a development ongoing, or you're planning to in Olo. Olo West. Talk to us about that.
Okay, so Olo West is a marginal field that we acquired from the stable of NNPC Total Joint Venture. It's an asset of interest because it's proximally located to our own existing asset. And in this year, 2025, we're commencing a re-entry to bring it back on stream and commence production towards the tail end of the year. But it's not just about Olo West. We actually have another field called Omerelu, which is also in that same corridor that we are working on to take through the field development process and then also bring on stream towards the end of the year. Right now, we are on what you call an extended well test, but the full field development will happen in the course of the year. And we're looking forward to ending of the year with active production coming from those three fields, just trying to strengthen and consolidate where we are at and make sure we are teeing off nicely into the future.
Right, and for your, because analysts we've spoken to are quite optimistic about the oil and gas sector this year. I mean, even with the unpredictability with the oil prices, geopolitical issues that are moving quickly and all of that. Let's talk about your own outlook for this sector this year. I mean, we have the regulators who are also looking to support domestic players, et cetera. But talk to us about what you're expecting.
I think we're going to see a lot of the reforms and initiatives of the past few years coming into fruition strongly in 2025. We're increasingly, as an industry, getting more and more comfortable with the interpretation and the application of PIA, and that certainty is stimulating a lot of investment. This time last year, rig count in Nigeria was barely 20. The last time I checked, it's about 39 now, and that shows that there is some shift in momentum in terms of investment, and a lot of this investment are development drilling to tackle incremental production. So the constellation of all the initiatives from government, whether it's the executive order, whether it's the sustained high price, is just giving some sense of buoyancy to the sector as we see today. And not minding the fact that the effort of government from government security agencies and all other security apparatus employed to make sure that the issue of crude theft abates, they're all coming together. So my view is that the sector is set to see increased production in the course of this year. When you also factor in what the regulator has done, coming up with a 1 million barrel target, it's all aligning up very well. From an energy security point of view, it's great news that we now have significant larger refining capacity domestically. And so from a refined product availability, from the impact of that in terms of import substitution, less pressure on your scarce forest chasing importation, I think it's a great promising outlook for 2025 for the industry. And my honest view is that this industry is going to be a significant contributor to the economic growth that we're looking for.
Do you think we've been able to properly articulate that, and especially to other investors, not just domestic investors, international investors? Because I know the federal government is keen to bring in more players into this sector this year. But obviously you're here, as a player. Do you share that sentiment? So maybe also around perception about the industry and all of that.
Well, I mean, I'm not the spokesman for the nation, but I do have a privileged position where I see things happening. And I think the government is doing a lot in communicating this. There's a lot of renewed optimism from investors the FIDs that have been taken in the industry recently, it's obviously a response to some great stuff going on. And I've been in different fora, conferences and all the likes where you actually see spokesmen of these governments making spirited efforts to paint the picture that Nigeria is up for business and we should be the preferred destination for investment in this industry. For those of us who are in the private sector, the collaboration is just getting better and better. And we are also there speaking to our own experiences and not just trying to dress up things, but say, this is our experience, this is our view. And I guess this is part of that as well. So it can get better, but I think the right noises are being made, the right points are being made. But the acid test is the results. And when you see that result, nobody argues with it. So I think we're in for some great results in the course of this year coming from our sector. And that will then put strong credibility to all that is being said by way of government pronouncements, policy changes, and all of that.
Okay, we'll keep our fingers crossed. This is definitely one sector that we're also watching this year. Well, thank you so much for being here and sharing that with us. Appreciate your time. Adegbite Falade, CEO of Aradel Holdings, sharing the company's or breaking down the company's full year 2024 earnings.